CME Group launched Micro E-mini Futures Contracts. Discover how a smaller Micro E-mini Futures Contract opens the world to greater trading possibilities.
Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Bob Icino. Welcome, Bob.
Good to see you again, Jeff.
Well, Bob, interesting. Markets continue to toss and turn in the wake of the ratchet up trade tariff conversation, but we just saw a hairpin turn in the market. Markets are moving higher due to the fact that we're seeing these new increased tariffs being delayed out to December 15th. What else has your attention this week, or are we solely focused on the trade tariffs?
Yeah, nothing else has my attention right now with earnings season winding down. This is a slight thawing in the trade tensions, but this is a very large ice cube. So I don't think we're out of the woods, but certainly a good sign for the short term.
So the ultimate question is, does this get us closer to a resolution, or is this all part of the negotiations?
Well, it's part of the negotiations that are now continuing, and that's the key. Without negotiations, we're much further away, but we're still far.
Oh, fantastic. Great stuff. Let's get this first lightning round. You ready, pal?
I am ready.
Crude oil. Well, we have seen a correlation between crude oil and the equity markets. We did test that earlier $50 level just a couple trading sessions ago, and now here we are, up and away for crude oil. Does it have a ceiling?
I think it does. I think it's the upper end of that range. And that's why the example I want to look at is selling the week 4 August 62.50 call spread in WTI crude oil. The selling of this call spread allows you to collect about $150, and the expiration is August 23rd.
And this is really interesting. The October future was the underlying contract, about a 56.75 when this trade example was priced out. We're seeing that at the money volatility, it came down a little bit, but still above 30, Bob.
Yeah, it came down about 4%, but it's at about 31.5, which is probably about 10% over the norm.
So did we fall back into the range here? We had so much emotion. People were talking about $50 being cracked. The market was going to go lower because of production numbers here, but all of a sudden we're back almost at 60.
Yeah, we've still got weak economic numbers in Europe, so the bullish story is very difficult to find.
All right, I like that, Bob. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round.
Let's do it.
FANG toothache. Well, we certainly have seen the market move about 1% swings per week in the equity market, but it's interesting to see the buying that came in today, specific to the names like Apple, Microsoft, all those tech names that are really inside of the E-mini NASDAQ 100. Are people okay getting back into tech?
Well, I think you have the same story as you do with crude oil. Again, that there's a little bit of thawing, but we're nowhere near a deal. So tech could struggle going down the road.
Well, that's the trade example I want to utilize really embraces what you just talked about, Bob, where yes, we have some thawing, yes, we may have some resolution, but I anticipate more and more negotiations and more volatility. So I want to be a seller of a call spread. This is the 8,300 call spread I want to be a seller of in the E-mini NASDAQ 100. This is going to allow me or an investor to potentially collect about $350. The September futures underlying contract in this, but Bob, we have seen some volatility all week long in the E-mini NASDAQ.
Yeah, and especially this morning, the September contract was about 77.78 when we priced this out. That is much higher than it was when we first met in the studio.
Yeah, and the at-the-money volatility, we talk a lot about the at-the-money volatility, and that helps us understand the premium. Do we want to be a buyer of options? Do we want to be a seller of options? With the at-the-money volatility in the E-mini NASDAQ 100 above 21, I like being a seller here, Bob.
Yeah, I do too. And again, being the typical reaction to these thawing is another frost. So this expiration of August 23rd kind of plays in really well with what's going on.
All right, Bob, great stuff, and thanks for always coming on Striking Options. And please tune in every week as we will continue to strike options.